Is it time to put your money in DocuSign? This company has just had an incredible day in the market. Will this growth continue? Should you be buying, selling or holding this stock? Let's find out in this video. Before we do get into this video, I'm not a financial advisor. This is not financial advice. If you could leave a like and subscribe, that would be greatly appreciated. So on a daily chart, we can see that DocuSign is up a massive 27%. So what is the reason for this? So the company released its third quarter earnings last night, beating the Analyst estimates and guides for a stronger than usual full year. In the third quarter, DocuSign had a revenue of 8% growth and an earnings per share that had been adjusted of 90 cents. These both beat the analysts' expectations. In addition, the company delivered strong guidance, most notably in terms of billings, which is a keen investor focus. Management expects billing rises between $870 million and $880 in Q4, accelerating growth from $752 million in the third quarter. So here it says that DocuSign is 70% below their all-time high in 2021, which is very true, with them peaking at the end of 2021 at around $310 per share, and they had a huge drop off. This is very similar to Carvana. So here we can see a 5-year comparison of Carvana. Here they peaked at late 2021 and they properly dropped down in the start of 22, and they are now rising up again. DocuSign and Carvana are completely different industries, so it is important to note that they're not going to follow each other. However, there is a pattern emerging between the two. Can DocuSign follow in Carvana's footsteps? It just goes to show that there is definitely a huge growth potential within the market right now. So with DocuSign being around about here, can they continue to climb up in the next few quarters? So we are now going to put their financial figures into my system from the last 5 quarters, and this will help us see whether or not this is a strong company financially. So looking at the liquidity ratio for DocuSign, this is incredibly strong, as they are in the last 3 quarters well above 1. They're actually around the 7-point mark. Ideally, you want to see this above 1, as it converts the liquid cash to total debt and puts it into a ratio. You want to see this above 1, as it means for every dollar of debt in which you owe, you have at least $1 of liquid cash to pay it back. As in the world of business, cash is king. You can't be just selling your assets in order to pay out your debt. So this is incredibly strong for DocuSign. Now let's move over to the retention. Again, looking at the retention rate, this is also incredibly strong, with them in this last quarter just been announced making a 120% retention rate. This is due to a tax provision where they were actually owed money back through tax. From what I understand, if there is another meaning to this, please do let me know in the comments, as it's quite a weird one to try and understand, but that's my understanding of it. So we're not going to see a retention rate like this within Q4. I don't think. It would just be a bit outrageous. But apart from that, their previous retention rate is okay. Ideally, you want to see it around 10%, but it is still all right. And finally, looking at the free cash flow, this is also very good. It's very stable, with the difference between the operating and free being really stable, and the trend lines are predicting this to have a slight decrease. However, it's such a slight decrease that you're not really going to expect to see much within it. This free cash flow will be used for stock buybacks, paying out debt or paying out dividends, in which DocuSign currently don't pay a dividend yield. Now taking a look at a 365-day volume to price comparison with a exponential 52-week moving average, we can see that we are currently above the 52-week moving average. However, if we move over to a 91-day moving average, we can see a more accurate representation of the stock. This is actually relatively strong, and it is nothing that concerns me at all. This is actually a very bullish chart to be looking at. This is because we are well on the trend line at the moment. If you are massively above it, which we are on a 365 one, but when you move on to the more accurate one, we're actually on it. It can often have a huge sell-off as the market realizes how overpriced the stock is. However, if you follow the trend line closely, you're more likely to be a sustainable price. However, this doesn't always happen, as I've put here. It's not a law at all. It's just a trend, of course, so it's something to watch, but for me, a very bullish sign for DocuSign again. And now looking at some of the figures, we can see a P/E ratio of 17.65, a 52-week high of 107, a low of 44, this being a difference of 63, a market cap of 21 billion, a volume of 15 million, an average volume of 2, so we are well above at the moment, which we'll get onto. And we have a beta of we have a beta of 0.92. So that essentially compares the volatility to the Nasdaq. So this is a less volatile stock than the Nasdaq in general. This can be seen as positive or negative. In the case of this, I would definitely say it is positive. And as we can see here, we are well above the average volume at the moment. So it is a bit of a volatile time, but this is just due to the Q3 report being so good and people are buying and selling off for profits within the stock. So what do the analysts think? They project a lot of volatility in the next 90 days, with a low being around the $30 mark and a high being at the $130 mark. I do definitely agree with this volatility here. I do think it will go up though to around the 120, 125 mark within the next 90 days. However, again, I'm not an analyst, I'm not a financial advisor. Furthermore, on a buy, sell, hold scale, they are saying to hold. I think this is just due to the volatility at the moment and the huge increase within the last day. But in my opinion, I would say it is a buy. This is based off of 23 analysts and they are probably smarter than me. And within 2025, they are projecting a decline on price, with only a few of them projecting it to go up to around 125, which is where I personally put it. So I don't currently hold any DocuSign stock, but I will be looking to get into this stock for sure. I do see a lot of positive signs for this stock with looking through my system, so I will definitely be trying to get into this maybe earliest next week. I think it was a bit too volatile to get in today. As of today, it is the day the earnings came out, so we have seen a huge volatility spike, and I do think there might be a bit of selling off in the new week. But for sure, long term, I have to give this stock a B+, as DocuSign is a service that a lot of people will be using going forward into the future in a more digital world. So with that being said, I'm going to end the video here. I'm sorry it was a short one today. Like I've said, I've been very ill. You can definitely hear it in my voice now. So I would like to reiterate, I'm not a financial advisor. None of this is financial advice. You should always do your own research. With that being said, please do leave a like, subscribe, and I'll see you for the next video.